recede from their highs about a year ago. And as the forecast from the Federal Reserve is for lower interest rates, people are shifting money, I believe, from fixed income into stocks. And of course, in the real economy, that makes CapEx expenditures a little bit more affordable if the price of money to build the factories or whatever it is less. And of course, consumers too, going out to buy a car, going to look at a mortgage. Mortgage rates are a good 1% less than they were not too long ago.
Rates on cars are still a little bit too high.
Yeah, Matt actually knows a lot about that.
If only someone would make the interest on car loans tax deductible.
And, you know, we talked about that with the other David, though. We have to talk to this David, and we're going to talk about your ranking system, because I think it's interesting that you said it's earnings and then it's interest rates, because we talk to a lot of people who take the other side. When you say that earnings are most important, are you talking at the index level, or are you talking at the single stock level?
Oh, really both. I mean, at the end of the day, you buy a company for not only their earnings today, but for the growth of earnings. Interest rates will fluctuate up and down, but if ultimately a company is not going to increase sales, not going to increase earnings, it's not going to go anywhere. So I do think that's most important. Obviously, you like to have both the index earnings going up as well as your particular company's earnings going up. But if you can't have the index, at least you can, you know, hire a stock picker.
Were you encouraged by J.P. Morgan this morning and the slew of, you know, Wells Fargo? Who else reported this morning? The kickoff, BlackRock, exactly, $11.5 trillion in assets under management. Were you encouraged by these earnings? Because they do undergird the entire economy of the United States of America.
That's the second
right?
time I've heard you say undergird today.
I actually thought of that word this morning, and I'm going to keep saying it now. I don't even know if it's a real word.
No, it is.
So it was encouraging, I think, for a number of reasons. I think a lot of people were looking at their portfolios, particularly their commercial loans. Were they going to see some massive write-offs or something like that, which should suggest that a lot of borrowers are having trouble paying? We didn't see any of that. There's a little bit of weakness in the credit card portfolio, but I think most strategists are saying, yes, at the very lowest areas of the consumer spending levels, those people unfortunately are having problems, but the heavy hitters are paying their bills and spending more. Certainly the net interest margins, that all-important gap between what they're paying on their depositors and what they're getting for their loans, continues to look much better than expectations. So I thought it looked pretty good.
Look pretty good. Well, we have a lot more bank earnings coming up, and then we get the regional banks, which should be really interesting. They've been interesting, maybe more interesting than the big banks, of course, since the collapse.
Maybe more important to the economy, right?
Exactly.
Because, like, if you care, David, about the whole economy, do you really care about Goldman Sachs trading revenue?
Well, they are major. It's in the Dow. It's a major bank. Certainly, there is a difference in their businesses because you got those major banks have a lot of trading revenue. They're exposed to that M&A market, that IPO market. Those are things that are not really part of the business of the regional banks. So I agree with you that the regional banks, you get a better sense as to the how things are going on Main Street in the middle market areas.
You mentioned the Dow, and unfortunately, I don't care about the Dow, which Matt knows very well.
I still care, though.
Yeah, no, and a lot of people do. I care about the small caps. We talk about it because usually we can show three indexes. So it's like, do we go with the Dow? Do we go with the small caps? You should have had the Russell 2000 up for the past 3 months, I would argue, because they've been a very interesting cohort of this overall equity market.
Yeah, absolutely. So we've actually been a fan, perhaps a little earlier than we should have been, of the small caps. And the reason, quite simply, is their valuations are much cheaper relative to large cap, of course, versus the Mag 7. And they're also cheaper than they have been trading at typically. Actually, they usually trade at a premium to the large caps because they have more growth potential. We have not seen that, so we keep thinking that there will be a reversion to the mean. I think the main headwind for them has been those high borrowing rates and the potential threat of recession. Because they're smaller, they have less of a cushion, so they're going to be more susceptible to the vagaries of the economy, and they're more likely to have to go to their local bank, who, by the way, was very sensitive as to how much more credit they wanted to extend. But now with interest rates coming down, with the valuations being really at nosebleed levels for many of the Mag 7, I think investors are looking to broaden out their portfolios and take advantage of that. And of course, today you will notice that the Russell 2000 is beating the pants off the very fine performance of the other indexes.
There you go.
Does the election matter to you? I mean, not personally, but as a strategist.
Well, so yes and no. It really depends on your time frame. Now, we urge our investors to take a long-term time frame because that gives you the best chance of having success making money. And I always go back to what Warren Buffett used to say, oh, I've been investing through 16 administrations, 8 Republican, 8 Democrat. I've done just as well, no matter who was in charge and in the White House. So we don't think longer term it really affects what's going on. In the short term, though, I do think there's some hesitancy. We heard from Delta yesterday where people are not even wanting to book travel around the election itself because people, I don't know, perhaps they're afraid of disruption in terms of the investment, in terms of the election results. So we think that after we get past the election, you could actually have another tailwind to the market.
David, it is great to see you. Really appreciate you coming by on this Friday afternoon. That is David Dietz. He is Managing Principal and Senior Investment Strategist over at PPAC Private Wealth Management. Meanwhile, we are just about 10 minutes away from those closing bells. Right now, it looks like we're going to get lucky number 45 when it comes to closing highs on the S&P 500 this year. Don't go anywhere. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, welcome back to Bloomberg Business Week on this Friday afternoon. I'm Katie Grayfield. I'm sitting next to Matt Miller. We aren't Carol Massar. We aren't Tim Stenivek. They're traveling, as we keep discussing. Matt and I have been on air for 15 hours straight, so it's been fun though.
Usually at this time of day, I am in my car listening
to
Carol Massar and Tim Stenivek,
Yeah.
and it's kind of dangerous because I have my Bloomberg terminal obviously on my iPhone, and I'm sitting on the major Deegan, and they'll say something
Like in traffic, probably.
Yeah, that I disagree with. So I'm like steering with my knee, and I'm being Tim Stenevec.
You're gonna get arrested.
I know.
Jesus.
Carol never writes back, but Tim does.
No, yeah, that's funny.
Yeah.
Let's talk about Harvard.
Yes, well, I always love talking about that school in Cambridge. The president there, Alan Garber, said he's disappointed by the school's fundraising efforts in the wake of the campus turmoil over the past year. It is, of course, the wealthiest U.S. university, preparing to release an annual financial report that covers the period following the Hamas attack on Israel on October 7th of last year. Harvard faced, as we spoke about often, a barrage of criticism for the way it handled protests and incidents of anti-Semitism on campus. I think it's important to point out, though, that you can stand against Israel's policy or believe that the country of Israel is doing the wrong thing, at least in my opinion, without being anti-Semitic.
Yeah, that is a difficult needle for these colleges to thread. Obviously, we've seen all of that play out on campuses across the country, particularly at Harvard. I feel like a lot of these conversations really kicked off with what we saw at Harvard. Remember, its former President Claudine Gay, slow to condemn comments by student groups that blamed the attack solely on the Jewish state. Among the alumni who paused gifts to Harvard are billionaires, including Ken Griffin and
Glenn Blavatnik.
Yeah.
And what about Bill?
Yeah.
Ackman.
Yeah, he had some very strong words for Harvard, obviously. Gay ended up resigning in January after that testimony she gave before Congress. I mean,
that's the one thing I will never understand. You know, if someone asks you if it's okay to make anti-Semitic remarks,
I feel like the answer is no.
You should say no.
Yes. But that's part of the reason why it was so heavily criticized and why she ended up resigning in January. It seems like it's not necessarily immediately smooth sailing, of course, for her successor here.
It is a massive endowment, though. More than $50 billion, powered by massive fundraising efforts. You know, people from Harvard tend to go on to pretty successful careers.
That's true.
They make often a lot of money, and they give a lot of that money back to the school. They raised at least $1 billion annually over each of the last 10 years.
Yeah.
So pretty often at the very top of the list of higher education endowments.
So a huge endowment, and you think of the brand name that Harvard carries, it's pretty powerful, though it does feel like the conversation around higher education and Ivy League universities has changed a little bit over the past couple years, both around what we're seeing with all of this campus turmoil, but also, I mean, are you getting a return on your investment if you pay a ridiculous amount of money to go to Harvard?
True, although I don't think most of the students there do pay the full price, right?
That's true, but
they
even
give out a lot of scholarships. Do people often confuse Haverford and Harvard?
Yeah, it's a big thing.
I felt like that would be it. What are Haverford's colors, by the way?
We are black and red.
So I think that's pretty close.
I know, it's really bad. So when I was on the cross-country team over at Haverford, when I started, the uniform was black with a red H, which is very Harvard, and we ended up changing the uniforms while I was a student there to, it said Haverford across the chest, and that, you know, people, it helped a little bit.
And it looks like Harvard. I mean, because Harvard is like maroon or scarlet,
yeah,
right?
I know. It was a sore subject because Haverford's a very good school, but we're not Harvard, so it hurt a little bit.
Maybe Haverford's better.
I would think so.
It all depends on the individual, right?
I'm a huge Haverford fan. Anyone feel free to IB me. I'd love to talk about it. Anyway, we are just moments away from the closing bell on this Friday. Don't go anywhere.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you to the Closing Bell, a global simulcast. It starts right now. We're joined right now in the radio booth by Katie Greifeld and Matt Miller, filling in today for Carol Massar and Tim Stenevec, and Scarlett Fu, as always, joining us here in the television studio as we welcome our audiences across all of our Bloomberg platforms, including, guys, that relationship that we have with YouTube. Katie Greifeld.
It is so great to see you, Romaine Bostick, especially as we are just moments away from the 45th record close on the S&P 500. Can you believe it? Here we are, of course, being buoyed higher by the big banks today.
Yeah, just powered higher, and we saw that kind of a slow start this morning at the open. I don't know if you're aware, Katie and I also anchor Bloomberg Open Interest, which takes you through the most important hour of the market, the open. And we saw the bank start to gain a little bit and then gain some momentum and really power higher until JP Morgan was up 5% and change. We saw Wells Fargo, even with maybe a little bit of disappointment in its earnings release, up more than 6%. The financials, the biggest gainer in terms of industry groups.
Yeah, if you look at the KBW Bank Index, 23 out of 24 names are higher. And what we saw from some of the banks may kind of set the tone for earnings season, which is analysts have been ratcheting down their estimates for third quarter results, while management looked a little bit more optimistic. So that creates a lower bar to beat. And we all know that that typically is what happens, but it gives us some momentum going into this earnings season.
What I was really into is Fastenal. Romaine, you and I were talking about that earlier. That did really well. That's industrial, real economy stock.
Yeah, absolutely. And look at the commentary we got out of the banks. That was real economy talk here, and that provides a little bit of a boost to sentiment here on this Friday afternoon, where we take a look at an S&P 500 off the highs of the day, but above that 5,800 level, 58.14 and change as we wait for these numbers to settle. That's going to be good enough for a 0.6% gain on the day. And yes, another record high. The NASDAQ Composite also higher on the day by about 61 points or 0.3%. The Dow Jones Industrial Average, which is now Alex Steele's favorite index, or average, I should say, up about 1% here on the day. But take a look at the Russell here, because it really has gotten left behind in this broad-based rally that we've had going back over the last couple of years. But it is playing catch-up. An outperformance on the day, up about 2% here, as it now logs a weekly gain, and came into today looking like it was going to have a weekly loss.
All right, meanwhile, you take a look under the hood. I know we're all about the big banks today, but big breadth in this market. In the S&P 500, 434 stocks closing in the green, just 68 stocks in the red. And Scarlett, according to the Bloomberg terminal, there was exactly one that was exactly unchanged.
Exactly one. Well, we'll see if that remains the case as the market settles. But in terms of how things are shaping up with sector performances, there are actually a lot more gainers than decliners. 9 out of the 11 groups are in the green. But the reason why it looks so lopsided is because tech, which is the biggest sector in the S&P 500, is basically finishing unchanged. Consumer discretionary down 0.4%, and that's mainly because of Tesla. Among your gainers, we've been talking about the financials, up almost 2%. Industrials gaining 1.8%. That gets back to Fastenal, which Alex was just talking about, and real estate investment trusts gaining more than 1% as well.
All right, let's get to some gainers right now. I had plenty to pick from, so we'll start with Uber. Of course, we were talking about what a bad day Tesla's been having. Of course, its robo-taxi event, the RoboCab, didn't exactly go over too well. Scant details. That's all good news for Uber, at least according to this market. Uber shares finishing the day almost 11% higher. And then Fastenal, really interesting one. Like Alex said, a real economy stock here. It's a distributor of industrial and construction supplies. It provided a third quarter reading that showed sequential improvement in daily sales. People clearly psyched. You can see Fastenal having a great day today. And then I had to finish with the financials here. I picked JP Morgan, because it's the big one, having a great day. Of course, it beat on investment banking fees. It beat on net interest income, et cetera. It had a great day, and
Exciting.
you saw it throughout the whole sector.
It's not exciting as fasteners, though.
No, I agree with
I
you.
agree. Thank you.
We're all in alignment here.
Well, I mean, it depends how you look at it.
Go on.
It was just 1 month and 1 day ago that Daniel Pinto came out and said JP Morgan was going to miss on net interest income, and the stock tanked. It had its biggest drop in 4 years. And now that feels like it was a setup for today.
Well, they did also say that 2025 estimates are a little bit too high, and that JP Morgan is not going to make the full year 2025 numbers as they currently stand.
2025 is like 15 years from now. Who cares?
And you're certainly not seeing anyone thinking about that today.
No, it's a long way away. I'm looking at the losers in today's market. Obviously, Tesla was a huge one after the big disappointment that was yesterday. Elon Musk announcing their self-driving taxi at a an event that was very flashy and at a movie studio, Warner Brothers, I believe, but was light on specifics. Didn't tell anybody about technical details, glossed over topics including regulation, because that's important. You can only actually make and sell 2,500 vehicles without a steering wheel, and that doesn't seem like enough to make money. He didn't say who's going to own and operate the fleet of cyber taxis, so it left, I think, more questions than answers. Stellantis was also a big loser today.
Wait, are you doing 2 car companies?
Yes,
He's doing other stuff.
Probably doing 3, right? I haven't looked that far
I
ahead.
mean, you could argue, I think Tesla investors would argue that that's a technology company and not just
I'm sure
a
they
metal
would.
bender.
No.
But
They're a consumer
Stellantis
discretionary company.
isn't doing
Yeah,
well
why
bending
not?
metal either. They have slumping sales in North
they're a
America.
materials company.
They delayed a new model introduction in Europe. They have quality issues, the threat of strikes. You know, globally, car sales is coming under pressure right now. And Carlos Tavares, you know, there was talk about whether one of the big owners, Johnny Elkann, would get rid of him before he retires in 2026. That didn't happen, but Tavares threw the female CFO under the bus. She's only been there for less than a year, and now she's out. I also have AOS. Have you ever heard of AOS?
Yeah, is that the water pump company?
Yeah.
Yeah.
Water heating and water treatment equipment. I hadn't heard of it, but it is a member of the S&P 500. One of that index's 503 stocks, down after lowering its annual forecast for net sales and adjusted earnings per share, citing continued softness in its China business. I'm here to say that if you pay attention tomorrow, this could be a big gainer on Monday, because the finance ministry is going to lay out how much it's going to give in stimulus. We're hoping for 2 trillion won, I think. That's the consensus. Also, TLN fell, and a bunch of other power companies, including Vistra, Alex, and Constellation. TLN is Talon Energy. This after regional grid operator PJM said it supports a delay to an electric capacity auction by 6 months. You probably know more about this than anybody else, but I just think it's interesting to watch these guys fall. A couple days ago, we thought they were dropping because of Google.
Yeah, I mean, so they've also had a really big run too, right? So if you're going to sort of right size a portfolio, or you're going to sell some of the winners, like some of these guys are the best performing stocks in the S&P so far this year. Okay, I'm going to the bond market here. You were looking at higher yields in the back end, lower yields in the front end. So it feels like everyone thinks the steepener is definitely happening, but how we get to the steepener, is it going to be a bear or a bull steepener? Is it because that front end comes down or the back end goes up? We've seen the latter over the last couple days, and kind of what that means for the market will be quite interesting going into next week.
All right, something to keep an eye on there. But it's a Friday afternoon. Let's talk about breakdancing. And just
As
to
one
bring
does.
the viewers into the TikTok here, I know that you guys wanted to talk
random.
about this. So breakdancing, we all learned a lot about it because of the Olympics and, of course, whatever that...
Except they didn't call it breakdancing.
Oh, yeah, it was just break.
Yep.
But anyway, we learned a lot about it thanks to Australia. Apparently, doctors are warning about a breakdance bulge that dancers can develop. It's on the top of their head. It's when they get on the top of their head.
It's
and they
called a
start,
head spin, Katie.
Yeah, I don't know. I don't watch breakdancing.
Of course you don't know. I don't know how any... Look, this story came out because of a 30-year-old who I
Yeah.
think is Danish. He got breakdancing bulge. He got a big protrusion on the top of his head, and doctors thought, is it cancer? What's going on? They did like an MRI.
He was
and
just breaking too hard.
he was breaking.
He was
But
practicing too much.
how does a 30-year-old... Like, breakdancing is
said-
for guys
well,
like
they
me
said,
and Romaine.
Matt, they
It's
said
for
that he
50 or 60-year-olds.
No. First of all, they said he started like when he was like, a preteen, and he was like practicing like 5 hours a day. You know, so I guess, look, if you're spinning on your head 5 hours a day, every day for like 15 years, I think something would happen to the top
I'm
of
going
your
to
skull,
try it,
right?
you know?
You're going to try
I
it.
mean,
You're
I'm
gonna
not,
start
I'm not a
breaking.
scientist or a doctor, but I would think
But if you
something
play one
happened.
on TV, that's what you would think.
Now, does he go bald too, or he just gets the bulge, but it has hair
It's a
on
great
top?
question.
It's a
actually.
growth of skin, so I think it's just a bulge. All right, quick question, you guys. I know it's been all over social media, but
Is this
did any of
about
you capture
breakdancing?
Northern Lights last night?
Oh,
Yesterday?
no, I'm so bummed.
Look at that. You know what though?
I
Sometimes
thought
the
you were
pictures
talking
come
about
out better.
weed. You're talking about actual
no.
Northern Lights.
Yes, indeed. That's what
We're being very earnest here. We're talking about Northern Lights in the sky, the show. No,
Amazing.
No
So,
one?
okay, no, I didn't see it. It's supposed to happen tonight, but it's moving farther north. So you have to be in like northern New York. It's really not going to hit New York City. I cannot. This is like on my bucket list in a big, big way, and I'm so bummed.
Yeah, well, it looks beautiful, and at least we have the photos.
I feel
I saw
like
him
we've
last
been
night
getting
in
more
Scarsdale.
Northern Lights instances in the last couple of years
Solar
than
storms,
before.
isn't it?
That's true.
Yeah, you can
Climate
see them up
change?
by us. You can come over to my house tonight.
All right.
And,
That's far. But
I'll do
thank
that
you.
anyway.
I have a Pilates class, but listen, we have to go, guys. That does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. A reminder that Bloomberg Business Week It's not on Bloomberg Originals. I feel like it's been there for a while, though. In any case, we'll be back on Monday. Have a great weekend, you guys.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, welcome back to Bloomberg Business Week. I'm Katie Greifeld along with Matt Miller. We are filling in for Tim and Carol. And Matt, I think we are truly done with the television portions now.
Yes, although we're still on YouTube. We're still streaming live on YouTube. So check us out there. Head over to youtube.com.
Yeah.
You can make comments. There's like a little chat.
There's a live chat. 2 days ago, people were commenting about my hair, which...
They said it looked amazing.
They did.
Which was probably the best thing that happened to you that day.
Yeah, honestly, I printed it out. Anyway, sitting in studio with us now is David Weston. Of course, he is the host of Bloomberg Wall Street Week. It comes out Fridays at 6 p.m. You can watch it with David. David joins us now for a preview. And David, of course, we have the unique delight of listening to some of your conversations beforehand on our show, Open Interest. And I know that you have a great week coming up. Eric Cantor, for example, Laura Crabtree, we listened to today, formerly of SpaceX. Who are you most excited about?
Actually, I really like the Laura Crabtree, the story of the race of SpaceX versus Boeing and what happened with the privatization of space. Although I have to say, I feel like I got nothing. I got nothing on braking. I got nothing on marijuana named after the Northern Lights. I am so far out of position. I got nothing for it. I'm racking my brain.
Space is pretty cool, David.
Well, it is. It's quite a story, though. I mean, if you think about it, because for those of us of a certain age, which you guys are not, and we remember, Mercury, Apollo, Gemini, going to the moon and things, and it was always governments who were doing it.
Yeah.
And then it turned private when they couldn't do it anymore. Remember the Russians had to take us up to the International Space Station? And so they opened it up to competition, and SpaceX just wiped the floor with Boeing. I mean, just extraordinary.
Yeah, no, I find this so fascinating, sort of the rise of private space. And we're not even talking about commercial private space right now. We're just talking about, like you said, getting astronauts to and from the ISS. And it is amazing.
And
I know
Laura Crabtree was on that team, as you know, for SpaceX that won the thing, basically. And she tells the story of what it was like. But I had forgotten, if I knew, there was a capture the flag game that was played.
Oh my gosh.
Where the last Americans that left the space station left a little American flag up there. And the contest was who can capture the flag. And SpaceX ran away with it. And she tells about the story about being in the control room when they actually pulled the flag. It was such a magical moment. It's an amazing story.
Cool. Yeah, what a great guest.
Yeah.
And it is amazing. I know that Matt knows that I'm kind of obsessed with Boeing. And you think about the decline of Boeing.
Yes. To me, that's the most interesting story right now around space. Because SpaceX has to step into a place where Boeing has failed.
Yeah, one of the things we tried to do was figure out how much it costs to do a SpaceX Dragon launch as opposed to a Boeing one. And I said, wait a second, on the Boeing one, they only got him halfway. They got him up, they didn't get him back, they didn't get a round trip. So you have to double the cost? I'm not sure exactly how that works.
Yeah.
But the cost difference is just astronomical between these two. It's really amazing.
No pun intended, I imagine.
No, not knowing, no, exactly. But we do have Eric Cantor on a very different subject because we are sort of inching our way toward an election here in the United States.
I heard we're 26 days away.
Yeah, something like that.
Yeah.
And so there's a lot of populism going around the world, including in Europe as well, as you know, Matt, as well as here. So we had Eric Cantor on because, he lived it. When he was House Majority Leader, remember, he got kicked out, essentially. He got primaried and the thing, and he talks about exactly what leads to populism, what really triggers it. This is part of what he has to say.
I think what I have seen since being off Capitol Hill is that notion that somehow there was a philosophical underpinning to the rise in populism really wasn't necessarily what was going on. It was just some real anger. And so I think the populism has deepened on both sides. Again, it is, I think, a portion of the electorate that's looking for an answer, and then politicians and those running for office that have found it's an easy way to respond to this anger and to provide a short-term fix, if you will, to a bunch of really angry people. And unfortunately, I think that longer term, some of the policies that result from reaching out to people who are angry aren't necessarily what I think the country would need.
So what Eric Cantor's talking about that in part is fiscal conservatism, because he tends to be a fiscal conservative, and he says the Tea Party came in saying we're to spend less money, tax less, and in fact they're not embracing fiscal conservatism. They're borrowing money to try to make everybody happy. That's part of the problem with the populace. At the same time, both he and we had an economist actually from University of Bocconi over in Italy saying, you know, it's a response to trauma like great financial crisis and like the pandemic, and the recovery that is not even, where people get left behind. And I must say, both Eric Cantor and the professor said there is some hope that maybe they'll come inside the tent and work with the other side and we'll come up with a more reasonable solution. You can only hope.
I've always thought it had to do with wealth inequality. Yeah. And we've been talking about that since, you know, the Brexit vote, since the first Trump election. But then it doesn't really make sense that people who are burned and left behind economically and have no money would vote for a billionaire that tends to burn people, right?
I think they just want to change.
Yeah.
I mean, I don't know. I don't want to speak for them, but my sense is they just want to change. They're not even thinking that much about where it takes them.
One of the changes that we've seen for the worse is San Francisco. I think it's fair to say that city has been in serious decline in terms of, you know, quality of life, right? It's the amount of homeless people that live there, the amount of crime that goes on in San Francisco. And you focus on that in this episode.
Well, we did it for just the reason you described, Matt, because we'd heard so much about it that it really just, it's almost hopeless. It's called a doom loop when a city gets into that phase. And so we went and talked with people in San Francisco, particularly some business leaders, like the head of Prologis, the largest commercial real estate company in the world now, as well as the head of Ripple. And they said not so fast. It's actually bottomed and it's coming back, including on the crime, that it's coming back. Now, part of it was, this may appeal to you, Matt, I don't know, they'd gone too far left. They were too progressive and they were too easy on the crime. And the business community really came together and said to the leadership of the city, you got to get your act together. We got to get tough. And they think that that is happening now and they're having results. At least that's what they think. They're
so
out of the
London Breed is bringing them back to the center?
That's what they say. Yeah, whether she wanted to or not,
yeah.
That's where she's going. And even at the statewide level, there's some movement. Because as you know, it's not just San Francisco. Statewide, there were a lot of things done with restrictions on policing that didn't necessarily have a good effect.
By the way, I feel like you might have a unique perspective into major metropolitan areas that formerly were, you know, flying high and have declined drastically but bounced back. And I'm talking, of course, about Detroit.
Well, Donald Trump has said that's the doom for all of us, right? I mean, I couldn't believe he went to Detroit, the economic hub of Detroit, and said, boy, if you get Kamala Harris, it's going to be as bad as Detroit. He's standing in Detroit. And by the way, you know this well, Matt. Detroit is coming back. Now, it's got a long way to go, but compared to what it was, including when I was there in high school and college, it is so much better, so much better. Now, part of it's because everybody left the city, so there's a lot of empty spaces, but they got a really progressive mayor who's really been tough on things and done a good job. The business community stepped up, but I couldn't believe Donald Trump went to Detroit to trash Detroit in a swing state that he really needs. I couldn't understand, why does this make them want to vote for him?
I'm sure his campaign managers were saying the same thing.
Right.
Asking the same question. So a big show coming up. Just coming back to San Francisco, though, one of the guests that you spoke to, her title is Executive Vice President of Criminal Justice. Just tell us briefly about that conversation.
Yeah, she works for actually a think tank. She's an economist.
Yeah.
And she was an academic economist, but now she's gone to a think tank in Texas where she specializes in criminal justice, and she really does analyses of that. And she's done a fair amount of analysis and come up with an answer which may not shock you. The only way to fight crime is to catch the criminals. And that means more police and more surveillance cameras. And by the way, to go back to San Francisco, one of the issues was they really had banned or really curtailed surveillance cameras, and that has now, I'm told, changed. That the tech center is saying, why don't we use some technology to actually monitor things? Because if people think they're on camera, they're likely not to do as bad things.
Yeah.
Big Brother is watching.
Yeah.
Well, but that's the trade-off you have, right? Yeah, sure, Big Brother. On the other hand, if it's your personal safety, and a lot of the people whose safety is jeopardized are the least among us, are the poorest and the most disadvantaged. You know, and by the way, if you ask a lot of those people, they'll say, I'll take Big Brother if it's going to keep my kids safe.
Yeah. David Weston, really looking forward to tonight's Wall Street Week. Of course, David Weston, the host of Wall Street Week. You can catch that 6 p.m. on Fridays, that's 6 p.m. Eastern on Bloomberg Television. Meanwhile, much more ahead when it comes to Bloomberg Business Week. Of course, we are rounding out this Friday afternoon, fresh off the 45th record high for the S&P 500. We've got a lot coming up, including Taylor Swift, Scooter Braun. A great conversation coming to us from LA.
Jaw-dropping.
This is Bloomberg.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. 5 winning weeks in a row for the S&P 500 index, finishing the week above 5,800. 45th record of 2024. Wall Street kicked off the earnings season. Stocks hitting records. Big banks rallied after posting solid results. Right to the numbers with the S&P up 35 today, a gain of 0.6%, finishing at a record 58.15. Dow Industrials also at a record up 409, up by 1% today. Nasdaq higher by 60, a gain of 0.3%. 10-year 4.09% with a 2-year 3.95%. Spot gold today up 1%, 26.55 the ounce on the precious metal. And West Texas Intermediate crude retreated today down 0.2%, 75.71 a barrel. Bank earnings, JP Morgan Chase out with a surprise gain in net interest income for the third quarter. Shares of JP Morgan Chase today advanced 4.5%, 5.4%. Wells Fargo also out with earnings this morning. It posted third quarter profit that topped analyst expectations. Wells Fargo up today by 5.6%. Bottom line, records for the U.S. stock market. S&P up 35, up 0.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you very much for that, Charles. Now, I'm very excited to speak with our next guest because I talked to him, Katie, a couple of years ago when I was co-anchoring with Carol Massar. Tim was out, I think, on paternity leave.
Sounds right.
So I subbed in for 5 or 6 months, and we had Marcus Shaw come on. He's Chief Executive Officer at Alt Finance. It's a $90 million 10-year effort to reduce the underrepresentation of people in color in private equity. And I just thought it was a fantastic interview. I learned a lot from Marcus. And I remember thinking, man, we got to check back in like a year or two and see how things are going. So I'm pretty pumped that he's back. Marcus joins us now from Washington, D.C. Marcus, great to have you on the program. I'm so glad that I happened to be filling in then and I happen to be filling in now. Talk to us, first of all, about Alt Finance and how it's going right now before we check back in on the things that we were working on then.
Matt, thanks so much. Great to hear from you again. Alt Finance, we are working on all cylinders. It's been a fantastic first 3 years to this organization. Formally launched in 2021, and here in 2024, we have had nearly 200 fellows that have come through our program or participating in our program now. We've got over 50 graduates that are out in the marketplace, most of them in the pathways for alternative investment opportunities, working either in alternative investment shops themselves or investment banks with their eyes on alternative roles in years to come. And so we couldn't be more excited with the progress that we've made in the first 3 years.
Yeah, that's great. I mean, 2021, you received $90 million commitment from some big names, Apollo, Ares, Oaktree, for example. So talk to us a little bit more for, the listeners who aren't as familiar with Alt Finance, just a little bit about how this came together. Again, $90 million, great seed investors there, that 10-year effort. Just talk to us about how you started.
Well, Katie, what I think is particularly interesting about the history of Alt Finance and the incredible partners that we have, Apollo, Ares, and Oaktree, is that the approach for solving the issue around diversity of talent in the alternative investment space, the approach that they took was very similar to the approach that they would take in an investment. A long-term commitment with capital and a solid strategy for execution. And our theory of change is really around finding talent that is high but had exposure to the alternative investment space through the normal recruiting cycle. And ultimately, that target audience were students at historically Black colleges and universities. Historically Black colleges and universities represent somewhere between 15 and 20% of Black undergraduate students and 10% or 15% of graduates. There are over 200,000 of these students throughout the country, and they are leading the industry in areas like healthcare, areas like law and politics and STEM. And so the approach that was taken by Alt Finance and our partner firms was, how do we bring this talent pool into the industry of alternative investments?
So you go to these HBCUs, you get students, you've got awesome seed investors to help you. I'm imagining they give you places to put these kids. How have they fared? I mean, have any of them been real success stories? Have any of them come back to you and said, that was fantastic, I want to help too now that I'm doing well? How has it worked out so far?
Matt, that's exactly what's happening. Not only with our 3 partner firms have we had success in placing interns and full-time opportunities for our students, but we've seen success across the industry. And again, the 200 or so fellows that we've had come through our program in the first 3 years, most of those students are moving into the pipeline for alternatives, again, either directly at alternative firms or through traditional banking pipelines. The main thing that's been exciting about this, less than 3% of our students in our first cohort really had an understanding of what that pathway would look like. Now we have those students that are 2 years out in the industry that are coming back and working with the new students that are in the program, giving them an understanding of how to move through that process, what classes to take, how to interview, knowing the progression of interviews, and what the true opportunities are across the different business units. So there is certainly a give back. We call it our flywheel effect that allows those first students to now contribute as practitioners in the industry into educating and exposing new students into the industry. But we also have great mentors that are not alum of HBCUs, but are working professionals at Aries, Oaktree, and Apollo that are also dedicating their time to making sure that they're building a talent pipeline of individuals that can come behind them.
It also seems, so when I first talked to you, I understood that you're taking these kids and putting them through, financial company programs. I see now that you're also taking professors, if I'm understanding this correctly, professors from HBCUs and putting them in Wharton. Is that right? What's this?
So we recognize that what we need is a practical solution for a historical problem. The historical problem is that this industry had not exposed itself to a lot of historically Black colleges and universities, even though great talent existed in the students and the professors. We are now supporting, through our Tracy A. Pruitt Visiting Professor Fellowship in partnership with the Wharton School, an opportunity for HBCU professors to spend time as a visiting professor, to learn and build relationships with professors that are operating in the alternative investment and finance industry, and allowing them to elevate their profile as a professor and then bring those insights, learnings, and experiences back to HBCUs to share with their students. We believe that we can gain incredible leverage, not only through educating the student and exposing the student to the industry, but also to exposing the broader HBCU ecosystem through professors and administrators to the industry as well.
And Marcus, it's interesting. I mean, you think about private equity, anything in the private markets right now is so hot. But when you start in 2021, of course, it was also hot, but it's definitely become more and more popular when you think about where young professionals want to go and where the money is flowing as well. I mean, talk to us a little bit about the evolution of the private equity space and how it relates to alt finance.
Katie, I'm going to take you back 20 years before 2021.
Let's go.
If you look back into the late 90s when I was coming out of school, private markets for endowments at the various schools that these students and students across the country are going to, the school endowments were less than 5% in private markets. Today, those numbers are north of 30 and in some cases north of 40%. So the industry has evolved, and we need to make sure that as the industry is evolving, that we are democratizing opportunity for everybody to participate in the industry. Much like we've seen in tech and like we've seen in healthcare, the financial service industry evolves as well. And so we want to make sure that students that were looking, at capital markets and sales and trading 20 or 25 years ago, that the versions of those high performance today are gaining an understanding of how to participate and enter the private markets as well. We're looking at a market that on a global basis is approaching $20 trillion. That's a significant number, and we want to make sure that people from all backgrounds that have the talent are prepared and have the opportunity to participate in those markets.
All right, we do have some breaking news, Marcus. I'm so sorry. Just sit tight for just one moment. We do have some breaking news out of Boeing. The CEO is saying that the manufacturer needs to restructure operations. Here are some of the details. Boeing to delay the launch of the 777X airplane by 1 year to 2026, and Boeing to cut 10% of its workforce, warns of deeper third quarter losses. It's going to cut its total workforce by roughly 10%. These job cuts to include its executives, managers, and employees. This all coming, of course, amid a big cash burn by Boeing. Of course, we just concluded the 4th week of its strike. A lot of pain going on over at Boeing. You see the shares bouncing around after hours, initially spiking, now back to unchanged. Traders trying to make sense of what's going on here. But what we know right now is that Boeing, of course, delaying the first delivery of its 777X program to 2026. Also, those job cuts, Boeing to cut its total workforce by roughly 10%, Matt.
Yeah, this is awful news for Boeing, maybe worse news for the union. You know, each month of this strike is forecast to cost them $1.5 billion, that according to JP Morgan. But they already burned through $8.5 billion in the first half. And because of that cash burn, they had to raise $10 billion in debt in the first half. Now Bloomberg has reported they're likely to raise another $10 to $15 billion in a secondary offering in this half. And they said now that revenue is only going to be in the third quarter 17.8 billion. It had been estimated at 18.6 billion. So they're not making any money. They're burning through cash because of this strike. And now they're going to have to cut or at least slow the delivery of the 777X program by another year. So it just really doesn't look good for the unions. For the workers that have gone on strike and have rejected an offer for a raise of what, 25% or 30% was the last offer?
Something along those lines.
Yeah.
I mean, the negotiations we know have really been locked in a stalemate. So really no progress being made. Again, fascinating to see these headlines coming out of Boeing. These are the biggest moves that we've seen so far by the new CEO. His name is Kelly Ortberg, of course, taking over the helm of the plane maker. We're talking about an American giant here, an icon of industry. But of course, the headlines, again, just to reiterate here, Boeing to cut 10% of its global workforce. That is 17,000 jobs, Matt. Also, again, coming out with some financial details as well, warning of deeper losses here to come. Also, as you said, Matt, to talk about the third quarter, we do have preliminary numbers coming from Boeing. Revenue expected at $17.8 billion. That is below the estimate of $18.58 billion. Boeing also expects to recognize about $5 billion in earnings charges. And I mean, we've been covering Boeing closely for weeks, for months now. Really, this whole year has been terrible for Boeing. And when they replaced the CEO, you knew that something big was going to happen. And now we're seeing some hard decisions made by CEO Kelly Ortberg.
Yeah, and again, I say, you know, if you're a worker there, it's really tough to go to your employer and say, we want a raise at a time when the employer is cutting 10% of the workforce and delaying production of its products. Now, in this case, it's different, I think, than a normal employer, not just because of the size and scale of Boeing, but because it has essentially backing by the government. We need, it's a matter of American security, right? This company to do well.
You talk about too big to fail. Exactly. Here we go. I mean, you really globally only have a duopoly, two big plane makers. You have Boeing and you have Airbus, and Boeing obviously has been in the hurt locker. Shares currently off by about 1.2% pre-market or post-market rather. This isn't the opening bell. But again, going back to Boeing's bad year, the shares are down 42% year to date. It has just been a punishing run. And I mean, it's interesting to see how the market is receiving this news, because in some cases, when you see big restructurings like this announced, you see the stock pop because, you know, shareholders say, good, they're doing something.
Yeah, they're letting out dead weight or putting out dead weight.
In this case, I don't know, the problems are pretty substantial here.
It's been not only a bad year, but a bad few years for Boeing, right? I mean, the stock is down 60% over the past 5 years. If you compare that to Airbus, which is really the only other major plane maker in the whole world.
Embraer, I think, would like to get there, but doesn't have the models.
Yeah. Airbus stock is up 12% in that same period, and actually 17% if you include reinvested dividends. So Boeing is having a very tough time. Just to reiterate these headlines, and we're going to get an expert on to weigh in just a moment, but delaying the first delivery of their 777X program to 2026. They're cutting 10% of their workforce. They have a number of workers, a majority of their workers on strike already, but they're cutting 10% of their workers, and they're taking a $5 billion charge in the third quarter. Plus, they think that revenue is going to be far less than estimated, 17.8 billion rather than the 18.6 billion that the street's looking for.
Yeah, and I'm reading the Wall Street Journal reporting right now. Of course, news agencies struggling to put out this Friday news. So Kelly Ortberg, again, he took over in August. He is the new CEO. The Wall Street Journal reporting that he said in a message to employees outlining the plan that, quote, "Our business is in a difficult position, and it is hard to overstate the challenges we face together. We need to be clear-eyed about the work we face and realistic about the time it will take to achieve key milestones." So clear-eyed, and that led him to this decision, of course, him and the rest of the executive suite. It's interesting. I mean, we were just talking with David Weston about the space program, for example. I wonder what the future of that program is, because we know it's not going well, and it's not critically important to Boeing. Boeing has so many core issues
But it
right
is
now.
to the U.S., right? I mean, you can't leave yourself in a position where you're dependent on Elon Musk as a country.
Yeah.
They've got to have a company with much more government involvement doing these things.
Yeah, well, it's interesting. You think about, you rewind 10 years ago, 2014, when the government started giving contracts to SpaceX. The thinking there was that they didn't want to be reliant on one company. That company was Boeing. 10 years later, that looks like a great decision. So, of course, SpaceX has filled that gap. But to your point, if it's only SpaceX, we're right back in that position once again. But again, a lot of big questions that Boeing needs to answer. Again, to reiterate, Boeing to cut 10% of its global workforce. That is 17,000 jobs. That's going to include all levels, too. That includes executives. It includes managers. It includes employees. Taking a look at the shares, now moving decisively lower, not huge moves. Again, this is a Friday afternoon, but shares currently down about 2% or so, just adding to losses on what's been a bruising year.
All right. We're going to get you Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson right now to weigh in on these headlines. George, really glad you could join us on such short notice on a Friday. What do you make, first off, of the delay of the 777X program? They say they won't be giving their first deliveries out until 2026. I don't know when they were planning to do it in the first place. So what do you know?
Yeah, it's supposed to be a 2025 event. So pushed out, maybe about a year. This program's had some challenges getting to the finish line. So, look, it's not good. It's not a huge moneymaker for the company. In fact, it's not a moneymaker for the company right now. And so for the financials, not that important. For the customers who are waiting for airplanes, more disappointment. You always run the risk that they're going to go away. Biggest airplane in the sky now that the 747, A38 are gone. So there are not a lot of good substitutes. So I'd say, disappointing, but not terrible.
Talk to us about the labor picture here, because, I mean, the headline that's catching everyone's attention, in addition to the financial details that we got and those delays, is that Boeing to cut its total workforce by roughly 10%. And interestingly, those reductions include executives, managers, employees. We know that Boeing is locked in that strike right now, that stalemate with its union. That has been going on for a month, that they haven't been able to do manufacturing over on the West Coast. I mean, how does that factor into that month-long strike?
Yeah, tough times are ahead. And that's what CEO Kelly Ortberg told the company when he told them there's going to be a 10% cut, tightening their belts here. It looks to me like they're posturing for the long haul, right? I think they're telling the union, we're going to slim down. We need to save a bunch of money, and we're ready to kind of go the long haul on our negotiations with you. We're going to take pain on the executive side as well. And I think, look, once the strike is over, there's still, some pretty big challenges here for profitability. And so I think this is part of, how they're going to address it.
Yeah.
A little bit surprising to me, but yeah.
Yeah, I know this coming from the Wall Street Journal, Ortberg saying in a message to employees while outlining this plan that we need to be clear-eyed about the work we face and realistic about the time it will take to achieve key milestones. Clear-eyed, definitely a phrase to underline there. We were talking a little bit about what this means for the space program, for example. We were having that conversation with David Weston, and then, now we're having it too. When you think about what could go, where Boeing could trim. What's the potential future of the space program here?
Yeah, I mean, there's a lot of small pieces at Boeing that you might be able to get rid of and make a little bit of money. But, you know, I've heard a lot of people sort of talk about GE and their turnaround and how they hived off a bunch of businesses to raise cash. I just don't see that potential here. We even saw that at Rolls-Royce where they hived off a bunch of businesses. I think there's small stuff they could make cash with. I honestly don't think space is something they could make much in selling. I think Musk's SpaceX is really kind of taking it to the government launchers, I should say.
You don't think SpaceX will buy the Boeing space program?
I don't think so, actually.
No.
I think that SpaceX has got the rockets they need. They've got the capsules they need. I personally think long term, I think Boeing does want to be in this space. No pun intended. And so I think that they will push through with their space program. I think it's part of their government contracting. It should be part of their core competencies. I think they'll retain it, but I guess we'll see.
And I'm hogging this conversation. Do you want a question, Matt Miller?
Well, I just don't know how much leverage workers have, or if the workers have far less leverage when the CEO comes in and says, you know what, I got to fire 10% of this company. I'm not going to be able to deliver the products that I wanted to next year. How then can the workers say 30% is not enough of a raise for us?
Yeah, so I think, again, this is part of that posturing. I think if you're the union, though, you say, look, a decade ago, we didn't get much at all. It's our turn to get our increase. And they're seeing, I think, organized labor get it all over the economy. And I guess I would come back to, you can't build the airplanes without the union. So I still think that, despite this announcement today, I still think that there's more power with the workers right now. Again, now we're going to, and this is part of, I think, Kelly Ortberg getting ready to, gird the company to go a bit of a distance in this strike, maybe to get the union to rethink their position. But I still feel like the union has more strength here, unless Boeing's willing to take it longer term.
Right.
I think that, bear in mind, they're building the 737, which is the moneymaker and the way out of this mess too. So
right.
To me, that's kind of like having one of the better chess pieces. I guess it's the queen, right?
And George, really quickly here, you think back to just a couple days ago, you had S&P Global Ratings warning that they could downgrade Boeing to junk. I have to imagine maybe that's put a little bit more urgency at Kelly Ortberg's heels. Do you think that these moves will save them necessarily? At least when it comes to the credit rating.
So this is a pre-announcement. We don't typically see pre-announcements out of Boeing. I personally think that this is a precursor to an equity issuance, and that maybe it comes next week. And I think they're gonna try to shore up the finances here next to go this long haul against the union. And I think it's I think that the rating agencies are concerned. I will tell you, the cash burn I saw, right, we're looking very quickly at these numbers, wasn't as bad as I had feared. I think they're about $10.5 billion, did they say, in cash right now? That's enough to run the company. I thought they might be sub $10 billion. Wasn't as bad as I had feared. So that might help the credit rating agencies. And if you raise some equity here, if you raise 10, 20 billion of equity, that might keep the rating agencies happy as well. And that this might be designed to try to stave, I think it is designed to stave that off.
10 or 20. I mean, there's a big difference between those two numbers. I've heard 15. Is that what you're hearing as well?
I've heard between 10 and 20, so I don't know, maybe that is 15. I mean, when you go to the equity markets, I don't know. What's the difference between 10 and 20? I think, you're going to dilute anyway.
What's the difference? What's $10 billion between friends? George, great having you on the program. Thank you so much for joining us on such short notice, to talk about this breaking news. So Boeing to cut 10% of its workforce and delay 777X deliveries. Let's get over to Charlie Pellet right now. He's got you a Bloomberg Business Flash. Charlie?
Thank you very much. And again, those headlines definitely worth repeating involving Boeing. As we just heard from Matt, Boeing plans to cut its workforce by about 10%, responding to the crisis facing the plane maker as it faces a drawn-out strike by workers and a worsening cash crunch. We got all this coming down roughly 20 minutes ago. CEO Kelly Ortberg in a memo to employees saying the reductions will include executives, managers, and employees. Boeing, of course, has already initiated a range of cost-cutting plans as it grapples with dwindling reserves and low output. But again, the key headline, Boeing, after hours, coming on a Friday afternoon, Boeing to cut its workforce by 10% as the strike eats into reserves. A record day on Wall Street today with the Dow, the S&P, and NASDAQ all surging. Big earnings from big banks. JP Morgan Chase up 4.4%, Wells Fargo up 5.6%, S&P at a record up 35, up 0.6%, Dow Industrials up 409, up by 1%, NASDAQ up by 0.3%. Well, as for the market backdrop, David Dietz is Senior Investment Strategist at PPAC Private Wealth Management, and he was a guest right here on Bloomberg Business Week.
We're in a bit of a Goldilocks situation here. I mean, earnings is always the most important thing as far as I'm concerned for the market. And of course, with the banks reporting today, that's the unofficial kickoff of the third quarter earnings season, and they basically blew it out of the park, beating expectations very handily.
David Dietz of PPAC Private Wealth Management interviewed right here on Bloomberg Business Week. 10-year, 4.09%. The 2-year, 3.95%. Again, recapping our top story, Boeing plans to cut its workforce by about 10%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks very much. Matt Miller here in the Bloomberg Interactive Brokers Studio with Katie Greifeld. Carol and Tim are off today, and we're filling in for them, and it's pretty fun. I'm excited to talk to our next guest. Sachin Devdugal joins us. He's the founder and CEO at Builder AI. And Sachin, I will never forget, about 10 years ago, Bloomberg Business Week, the magazine, put out an entire issue on coding. And the message was, if you want to take part in the future, you have to learn how to code. And I thought, oh no, I'm never even going to try and learn, so I'm out. Fortunately, that's not the case anymore. AI can do it for you. Sachin, can you tell us what you think of the possibility that no one is going to have to learn how to code?
Well, I think, that's definitely the future we're hoping on. But, it's a much bigger question than just coding, right? It's about allowing people to unleash their potential. I'm sure you had great ideas about software applications that you might have wanted to build, either as a side hustle or in your day job. But before, it just seemed too complicated to actually build any of it. And now you can actually have a conversation with an AI, get a design build, get coding done, and actually have it deployed. And that's really a really good glimpse of the future.
And everything that AI reaches right now is basically turning to gold. And you think about OpenAI and the fact that it's become so valuable in the private markets. Of course, it just feels like investors keep shoveling money at it. And I'm curious, what you think that says about the industry as a whole right now, because I'm sure some people look at these numbers that are being raised and just the many hundreds of billions of dollars of valuation that some of these companies are worth. Some might look at that and say, this looks like a bubble.
Well, I don't think it's a bubble, right? But I think what it does is it tells you just how early we are. So if you imagine, this is sort of like the AOL moment, or at least November 22 was the AOL moment for AI, where suddenly, in that time period, the internet had become prevalent. And now it's this idea that artificial intelligence can coexist with humans and really allow them to leverage, have superpowers and be able to do things so much more efficiently than before. I also think it's not a bubble because this is probably, if not the biggest, the second biggest infrastructure play after the internet, or after telecoms and the internet combined. And because it has such wide ramifications, right? Everything from healthcare to just day-to-day productivity, the infrastructure investment in itself is only just starting.
I wonder what you think about the fact that OpenAI has again raised $6.7 billion.
Sounds right.
Sounds about right. They have $156 billion valuation. And there's no talk of an IPO in the near future. Do companies like OpenAI, do companies like yours now take a much longer time before they have to go to public markets, or never even have to go to public markets at all?
Look, I think there are 2 or 3 different parts to this, right? If you imagine, because we're still so early in the technology and it's got so much potential as it sort of unshapes, you know, it's more like pharma than it is software. And we've seen in sort of those deeper tech pharmaceutical developments, finding new cures, it takes a lot more time and a lot more investment. And, you know, when you're ready to go public, a part of it is that you've proven out all of the thesis. But because we're still so early, there's a lot of the thesis that's still left to play. For example, everything is not a generative problem. You don't need to use a GPU to do everything, especially once you've trained a model. You should be able to run it on inference, right? That's more like an F1 car than a sports car. So it's much more focused and it can actually do its job really well. And so that's why I think companies like ours, OpenAI and others, are taking a little bit more of a measured approach to when they may go to the public markets, because ultimately they're trying to build a stable position before they do.
It is interesting. I mean, you think about all the promise. We talk about it all the time in the context of public and private markets. And I'm curious, I mean, is there the workforce there? You think about, I mean, maybe AI eventually will take our jobs, but to get the industry to that point, do we have the workforce to do that?
Well, so maybe starting with your last point, right? I don't think it's about taking jobs. I think it's about reducing tasks. And so if you imagine if there were like 30 tasks that you did in a day, and you could now offload 5 of the most monotonous, boring, repetitive tasks, and it could just be done for you. And maybe in the future it's 10 of them. It allows us to do what we do best, which is critical thinking, being creative. And so when you think about this technology making its way into sort of the mainstream, and it's still very early from making its way into the mainstream, really what it's doing is it's allowing human beings to be so much more efficient. And this whole point around upskilling and how to use AI and how folks will actually work with it, I think there's another whole angle to this, which is because the technology is so early, you need to do that. But once this actually gets full flight, you actually will just be able to have normal conversations, normal requests, normal tasks, and it will just do whatever it needs to do to help you out.
What's next for Builder AI? I mean, what's the future look like? And I guess we can talk about the near future because things are moving so quickly for your company.
Yeah, you know, we came out of beta about 4 years ago. We've seen revenue grow 10x roughly in that period. And I think what I'm just most taken back by is the ingenuity of our smallest customers to our largest customers. You know, for us, the real power still is how can we help the world become digitally native without them having to write a line of code or become a product manager or do computer science. And then as you go from that, the next question people are asking us is, hey, Sachin, it's great you helped us build a piece of software that let us do ABC, but how do we know we're successful? And so you're starting to see people now ask the right set of questions, but don't have the technical skills to even be able to answer that. So when you think about business intelligence or you think about analytics, my next question to folks is, why can't you just ask an AI a question about how are my sales doing in this region? Or, you know, what are the trends that I'm seeing in my best salespeople? And it gives you an answer without you having to hire an analyst that's going to go away for 3 weeks to give you a simple dashboard that you could just get conversationally.
All right. Sachin, great talking to you. Thanks so much for joining us. Sachin Dev, do call there. He is the founder and CEO of Builder AI, talking to us about the potential for this technology. Katie, I want to talk a little bit about the screen time event.
Yeah.
That I was listening to on Bloomberg Radio yesterday. You kind of got me into Taylor Swift. You showed me folklore.
She's the voice of a generation.
I learned about, through those songs, her feud